Hello everyone. In this video, we will be taking a look at some of the most significant market crashes that have occurred over the past century. From the Great Depression to the 2008 financial crisis, we'll explore the causes and consequences of each of these crashes and the impact they had on global financial markets. 10. The Great Depression 1929. The stock market crash of 1929 is considered one of the most catastrophic market crashes in history, with the Dow Jones Industrial Average dropping 90% over 3 years. This crash was triggered by several factors, including overvalued stocks, excessive speculation, and the failure of numerous banks. 9. Black Monday 1987. On October 19, 1987, the Dow Jones Industrial Average plummeted by 22.6% in a single day, the largest percentage drop in its history. This crash was caused by a variety of factors, including computerized trading programs and an increase in interest rates. 8. Dot-com Bubble 2000. The dot-com bubble was a period of excessive speculation in internet-related companies in the late 1990s. And early 2000s. The bubble burst in March 2000, causing many internet companies to fail, and leading to a market crash that lasted until 2002. 7. Black Tuesday 1929. Following the stock market crash of 1929, Black Tuesday occurred on October 29, 1929, when the stock market experienced another steep decline. This event marked the beginning of the Great Depression. 6. Asian Financial Crisis 1997. The Asian financial crisis began in July 1997, when the Thai baht was devalued. This led to a chain reaction in other Asian currencies, causing a sharp drop in stock markets and other financial assets in the region. 5. 1973 to 1974 stock market crash. The 1973 to 1974 stock market crash was triggered by the OPEC oil embargo, which caused a significant increase in oil prices. This led to an economic recession and a 45% decline in the S&P 500 over a 21-month period. 4. Black Thursday 1929. On October 24, 1929, the stock market experienced a significant decline that came to be known as Black Thursday. This event was a precursor to the more significant market crash that occurred a few days later on Black Tuesday. 3. 1990s Japanese Asset Bubble. The Japanese asset bubble was a period of excessive speculation in the late 1980s and early 1990s, which led to a significant increase in the stock market and real estate prices. However, the bubble burst in 1991, leading to a prolonged period of economic stagnation in Japan. 2. 2008 Financial Crisis. The 2008 financial crisis was triggered by the collapse of the U.S. housing market, which caused a domino effect throughout the financial industry. The crisis led to the bankruptcy of several major banks and a severe recession in many countries around the world. 1. Long-Term Capital Management Crisis 1998. Long-term capital management was a hedge fund which had experienced significant losses in 1998 due to its investments in Russian government bonds. This led to a panic in financial markets, and the Federal Reserve was forced to step in to prevent a broader financial crisis. As we have seen, market crashes can have a devastating impact on global financial markets and the broader economy. We hope this video has been informative and has provided you with some insight into the history of market crashes and their impact on our world. Thanks for watching. Don't forget to subscribe, and I'll see you next time on a brand new upload.